Semiconductors are now 44% of everything South Korea sells abroad. Take that one product out, and the boom goes with it. Now, the part that does not fit. This year, the money value of South Korea's economy grew at its fastest rate since the 1990s. Measured against that, the household debt burden fell to just under 90% of output, the lowest in 6 years. In the same quarter, Korean households owed nearly 2,000 trillion won, the largest amount ever recorded. The debt did not shrink. The number underneath it got bigger. That one sentence explains most of what follows. So, what actually happened to the miracle? The number people mean when they say miracle is growth. South Korea averaged close to 9% a year through the 1980s. Every decade since has been slower than the one before it. By last year, the economy was growing at 1%, and in the final quarter, it shrank. That was the argument 8 months ago. A rich country decelerating on schedule. Fewer workers every year, weak consumption, a slow squeeze on the industries that built the place. Then, the price of memory moved. Through the first quarter of this year, contract prices for conventional memory chips almost doubled in a single quarter on TrendForce's estimates, as artificial intelligence data centers absorbed the world's supply. Korea makes most of that memory. Within 2 quarters, every headline number in the country turned around. Growth, exports, the stock index, the debt ratios, the government's own balance sheet. Almost none of it came from the domestic economy. Almost all of it came from a price. Here's how concentrated that is. In 2023, semiconductors were 15% of South Korean exports. Today, they are 44%. Run the arithmetic on the Trade Ministry's own figures, and it gets starker. Most of this year's export growth is that same product. And 2 companies make it. Samsung Electronics and SK Hynix together hold roughly 2/3 of the world's conventional memory supply, on Counterpoint Research's estimates. SK Hynix reported an operating margin above 75% for the second quarter, a record for the memory industry. Samsung's memory division reported approximately the same. For most of manufacturing history, a 20% operating margin is an excellent year. The stock market followed. The Kospi has more than doubled in a year. Now look at the shape of those numbers, because it is the same shape every time. Almost every measure of economic health you have just heard is a fraction. Debt to output, deficit to output, exports as a share of output. And in South Korea right now, the movement is on the bottom of the fraction, not the top. Real growth, the volume of things actually produced, ran about 4% in the first quarter against a year earlier. Strong, not extraordinary. Nominal growth, the money value of the same output, ran 17%. The distance between those 2 figures is price. When exports get more expensive faster than imports, the money value of an economy jumps without a single extra unit leaving a factory. Every ratio with output on the bottom then improves on its own. Household debt stood at 99% of GDP at its peak. It is now just under 90%, the lowest in 6 years, on figures from the Bank for International Settlements. Government debt fell too, by a full 2 points of output in a single quarter. Meanwhile, the debt itself, nearly 2,000 trillion won of household credit. An all-time high, and still rising. And the measure leaves something out. Korean household credit excludes jeonse, the lump sum deposit, often several years of income, that a tenant hands a landlord instead of paying rent. It is a contract between 2 individuals, rather than a loan from a financial institution, so it is not in the number. So, record debt, 6-year low ratio, and the improvement sitting in the denominator. A denominator lifted by one of the most cyclical prices in the world economy. So who is standing on each side of that fraction? The winners are easy to name and few in number. Two chip makers with record margins. Their shareholders. The Treasury, which taxes all of it, and the equipment and materials firms clustered around the fabs. Then, there is everyone else. Private consumption grew by 0.5% in the first quarter. Gross disposable income, what households actually have available to spend, has stayed close to flat while national output surged. Small business is where that shows first. Last year, more than 40,000 restaurants that had been trading for 5 years or more closed. A record. Borrowing by the self-employed reached 1.1 quadrillion won. And the boom is making that harder, not easier. Chip prices feed into inflation, and in July, the Bank of Korea raised its policy rate for the first time since 2023, and signaled more. If you run a small shop in Seoul, the semiconductor boom has so far arrived in exactly one form: a higher interest rate on the loan you already had. The Korean press has a name for this. They call it a K-shaped recovery. So which reading survives the next 12 months? Both cases are built out of present-day numbers. The case that this is structural starts with what the memory is for. Artificial intelligence data centers do not buy chips the way phone makers do. They buy on multi-year contracts, and SK Hynix has now closed long-term supply agreements with roughly 10 core customers, which turns a spot market into a booked order book. On that reading, the constraint is capacity, not demand. The export base is broadening too. In July, 19 of the top 20 export categories grew, and the balance sheet is genuinely strong, with one of the largest trade surpluses in the world. The skeptical case opens the same data and reads a price cycle. Memory has done this before. It has swung from shortage to glut and back repeatedly, and the turn is fast. A single quarter of falling prices can take most of a margin with it. The competitive map is moving too. China's CXMT holds around 8% of the memory market and has said it is aiming at 30% by 2030. And underneath the cycle, the skeptics point to a number that has nothing to do with chips. The Korea Development Institute estimates that Korea's potential growth rate, what the economy can produce with the workers and capital it actually has, falls to around 1% by 2030 and towards zero in the 2040s. That estimate does not assume a memory crash. It assumes the workforce. Some of this is true whichever case wins. Start with the arithmetic that does not care about the price of memory. Last year, South Korea's working age population fell by 393,000 people. A mid-sized city in a single year. 1 in 5 Koreans is now 65 or older. Korea made that crossing faster than any country before it. In 7 years, while the countries it is usually compared to took decades. The birth rate, for the record, is genuinely recovering. 0.72 in 2023, the lowest national figure ever recorded, and now approaching 1. That changes the long run, not the next generation of workers. The workforce of 2045 has already been born. The second thing that holds either way is the bill. The OECD projects that pensions, health, and long-term care will more than double as a share of Korean output by 2060. That bill is denominated in the same GDP the chips are currently inflating. And the third one arrives wherever you live. If you bought a laptop, a phone, or a games console this year, the memory inside it cost more than it would have last year. Which brings us back to 44%. It is the number the boom is built on, and the number the risk is built on. One statistic, read twice. South Korea is not a country that stopped working. It still makes what the world is short of, still runs one of the largest trade surpluses on Earth, and is still, by any measure, rich. the miracle is not ending. It is narrowing to one product made by two companies at a price set somewhere else.